You log in also?
Can you log in? So,
you are logging the balance. Oh, yes. Your camera is on. Your camera is on. Okay.
me? Right. Sorry for the delay. The power's gone. Now let us start now. Then I explain the meaning of the taxable activity. The last one is the exploitation of the any intangible property and property such as patent, copyright, or other similar assets, where such as is registered in Sri Lanka, or the owner of such assets is domiciled in Sri Lanka. Again going to I like to highlight that the invalid taxation or the all indirect taxation, the tax is imposed in only for the person who purchases good and service in domestic. That means within the Sri Lanka. On that sense, once the good is imported in the country, the tax is imposed. And the same way, once the good is exported, that means good is tax is not charged. Why? The person, once the goods are exported, that means the person who is other days or the other country, they consume the good or services. If we import the taxes for the export goods, that means price is added to the good or the services, then finance consumer in the other country, they have to pay the taxes. That is not the theory of the value added or the indirect taxation. They should not pay the taxes over Sri Lanka once they pay the consume the good or the services. On that basis, any value added tax mechanism implemented in any other country in all over the world, goods are taxed at zero rated. That means we compute the tax as zero rated. Then no any taxes come. They are liable to taxes, but tax at zero rated. Right? That means if when the exporters, when they are manufacturing process or the production process, when they purchase a good or services in locally or the imports, they have to pay the taxes. They are purchase of good or the services. But all these taxes paid at the point of purchases, good or services, are refunded by the tax department to the exporters. Why? and at the end of the period, their value-added tax liabilities computed. The tax is put in the zero rate, that be the zero. Then tax value is the zero. When they purchase a good and services, they paid the taxes. That amount is refunded. That we easily understand if we are going to other side also. Then there must be taxable supply, other terms. That we say the taxable activity for the chargeability value added, the following conditions should be prevailed. The taxable activity should have been, one is the taxable activity, right? Other one is the taxable supply. There must be taxable supply of goods and services in the course of carrying out the taxable activity. We talk about the taxable activity. Now, when they carrying out this taxable activity, there must be taxable supply of a good or the services, right? The second condition. That one is the such supply should have been made by a registered person. There must be a registered person for that purpose, right? Then we know again. Then when we use the word of taxable supply of good or services, that means taxable supply of good or the taxable supply of services, right? Then we again, if we use the word of simply supply without word of taxable. Then again we have to find the meaning for the supply. If the words are taxable supply, there must be difference meaning, difference idea for behind that two words. Then that such type again, that type words again in the value added tax act has been in the act, in the interpretation section 83, the word taxable supply of good or the taxable supply of service have been defined. The taxable supply word is simply defined as taxable supply, any supply of goods or services made or deemed to be made in Sri Lanka, which is chargeable with tax under this act and includes a supply charge at the 0% other than the exempt supply. Then again, here we talk about the taxable supply. Again, now here the word of other than exempt supply. We have to find the meanings for all these terms. Again, see the such supply should have been made by a registered person. That means there may be other unregistered person. If someone has not registered for tax, he should not pay the tax. Though he has carried out the taxable activity in the course of his business, if we are doing a taxable supply of the service while he is doing his taxable activity, but if he has not registered, he should not pay the taxes. But to pay the taxes, there must be a registered person. We will see what are the difference between the registered person and the non-registered person. See, earlier we talked about the taxable supply, now supply of goods. Again, the word of supply of goods also, again, defined in the interpretation section. That means in the value added tax act and any tax act, if unfamiliar word is in the act, in the context or the body of the act, we have to refer the definition section. Very especially in the Inland Act, the word of prescribe is there. You can find when we refer the Inland Act, we can find the word of prescribe. Then if you are going to the definition section, the word prescribe is defined like that way. If any unfamiliar words in the act is there, we must refer to in context of value added tax act, we must refer to section 83 of the interpretation section. The interpretation section very clearly define the words of supply of good. In case of supply of good, the exclusive ownership of good is passed to another person as the owner of such goods. For this purpose, good means all kind of movable or immovable property. See here, the supply of good, the exclusive ownership of good is passed to another person. See, if someone has not the ownership of the goods, he can't do the taxable supply of the supply of goods. First condition is he must be the owner of the goods, and he must pass it to another person as owner of such goods. For this purpose, good means all kind of movable or immovable property. The good means all kind of movable or the immovable property. Even lands come to even buildings come to the taxable supply. If someone is engaged in the activity of constructing houses and selling, or then though it is immovable property, that is subject to that come to the word meaning of the supply of good. The supply of good, which is the word supply of service also. Any supply which is not a supply of good is a supply of service. If it is not a supply of good, it automatically becomes the taxable service and includes any loss incurred in taxable activity for which an indemnity is due. Say that matter has been already dealt in the income taxation also. Normally in the business, the stock in trade or the building or all other assets are insured. if any damage caused to the that type of stock or the machines or the assets, the insurer pay the insurance full damage. Then once the insurance premium is paid for the fire or the burglary by a person, the insurer collect the insurance business also subject to the value added tax as a service. When they provide service, they collect the taxes to whom their insurance product is consumed. Then they are normally the person who insures the goods. He has good or the property. He has to pay his premium monthly or the annually. Then when they pay the premium, they have to pay the value added tax portion also. Once the damage is caused to the good or the service or the machines, the insurer pay the damage. When the damage is paid, they have to pay the value added tax portion also. Then the person who insured the goods, he made the claim including the value added tax part. Say that he claimed the 1 million of damage from the insurance corporation, say that in Sri Lankan, then he put the insurance VAT rate of 15 also, that will be 1.5 million of VAT also. Right? If it is 100 million claim, then he put the 15 million of VAT also include this claim. Then the insurer has to pay the VAT. That time here we are going to highlight that in the doing this type of business with taxable activity, if any loss incurred in the taxable activity which individual is due, that is also become the supply of service. Come to say, the very recently in Sri Lanka we have very good experience. One Sri Lankan thermopower operator, their plant was damaged on fire. There is a huge amount of insurance, and but they have not paid the VAT, but department made the argument that your insurance claim is so you have received the insurance claim, that is so come to the definition of supply of service. You are doing the taxable activity, while you are doing your taxable activity, you are doing some services also. In your case, you incurred the damage which individual is due. That the value of this damage, also the amount received against this damage, also come to the meaning of the taxable supply. These are the very, very important words of the taxation: supply of goods, supply of service, taxable supply of goods and service, registered person, taxable activity. Other one is the taxable periods. Yes. In the Inland Revenue Act, the word, the year of assessment has been defined. Any period commencing, any year commencing from 1st April and ending on the 31st March of the following years, covering the 12-month or the 12-month period. That is the income taxation. All the accounts are prepared on that basis. Annual returns are furnished. But the income taxation, tax return in Inland Revenue Act and the income tax return of income is furnished in annual basis. Why? The return period is year of assessment of the covering the 12-month period. The value added taxation also they recognize the period of tax for the purpose VAT is called the taxable period. Again, the word taxable period means 3-month period commencing January 1st, April 1st, July 1st or the October 1st. Now the 3-month period comes, the first period is starting from January 1st. That if the 3-year period, that is the ending for the 31st March. The April 1st ending, the taxable period is ended on the 30th June. The July 1st is ended with the 30th September, and the 1st October start taxable period is ended on 31st December. If it is so, for the value added taxation, taxable periods are ended 31st March, 30th June, 30th September, and 31st December of the year. That's the period. And also for the facilitate the exporters and also the guarantee the speed collection of value added tax, and also the guarantee the cash exporters to refund immediately. The taxable 1 month taxable period also recognized by the Inland Revenue Act. That amount, the taxable 1 month period is only applied for the category of some registered person, for not for the all. See, any person make a zero supply such as an exporter. Any person who has been associated registered identified purchaser stays under simplified credit scheme for the Commissioner General. Person who are not commenced making taxable supply but are within the project implement, right? These are the some other category of value added taxation. Now simplify VAT means, SVAT means, now that has been abolished from with effect from 1st April 2017. Now therefore we are not going to explain much for the simplified VAT scheme, but since the effect from 1st April 2006, the next April we have that has to be will be abolished, and therefore we should not talk about that one. Any person who has made zero rate supply such as exports, they should submit their VAT value added tax declaration monthly basis. Their taxable period is monthly, not the 3-month period. Any person who has been accorded registered identified purchaser, right? For in the value added tax system, we had implemented the SVAT mechanism. Any person who supplied good or service for the exporters also, they also had to register as a supplier of good on monthly basis, and they also had to supply their VAT monthly, their VAT declaration in monthly basis. The person who have not taken the taxable supply but are with implementation period. This is a very good, very important part of the Value Added Tax Act. Say, you all can see, that is the normal experience. If large projects, it is complete, it will take more time. So even fact, if someone is started, if someone had wanted to start a manufacturing facility for the export of, say, the ready-made garments, then first he has to find the lands, then he has to put up the building, then he has to import plant and machinery, they have recruits staff for their office and also technical staff and also the laborers. There are so many things has to be done to commence the manufacturing operation. If it is a large business, say the investment more than 500, 600 million, the investment more than billions, it will take more than 2-3 years to start the commercial operations. Then still he has to buy. Once they have completed and commenced the operation, they have to pay taxes, value added taxes. However, when they start their project, say the starting of manufacturing facility, normally we label as a manufacturing project. Say any building is proposed to build, they have put about the project for the manufacturing construction building for they have put the purpose. Likewise, there are large construction projects, so the apartment construction projects, to complete their, if it is apartment complex buildings, to sell it, it will take more than 2-3 years. If the project is to construction apartments and sell it, it will take more time. But even get the approval of the building plan take more than 5-6 months. They have to import sophisticated material, say the building materials and all. The high-rise building goes more than 30-40 stores, then take much time. But when the building is constructed for sale, whether it is a commercial building or the apartments building, they have to use the material. When they purchase the material or the import material, they have to pay the taxes. Why? All the person who sells the goods, they collect the tax, value added taxes. Then in these projects, the value added tax mechanism, we we need to eliminate the cascading effect. That means once the tax is computed and we allow the tax credit for the when they buy the goods and services and paid some amount of value added tax portion, they claim as a deduction. In my illustration, we have very clearly explained it. Then see the value added tax mechanism, always say collection of it, VAT paid on. See manufacturer 7, they have see sale price 99,000, VAT paid on purchases 7,000, only they have paid 2,000. But if the value added tax mechanism not there for the project implementation period, say what is happened? But if taxable supply start, once the goods manufacturing started and goods are exported or sell in local market, or the if it is a large apartment project, once the apartment is sold, he collect the money, and that stage the tax liabilities arises. But for the up to that level, he has to purchase goods and services. In each stage, when they say this is a construction project, he have to purchase the steel. When they purchase steel, they have to pay the bill included the VAT. When they purchase cement, the cement bill invoice includes the VAT paid. When they purchase the paint bill includes the VAT paid. When they purchase architecture services, then architecture also charge the VAT. Always I see in this project, VAT is charged, separate charge on their invoice. VAT is added to the price and collect from the person who buy the good or the services. To easy understanding, we must follow the theory of the value added mechanism as I given the illustration. On that way, these large projects, the department, though the taxable supply is not been started, department registered that person as the taxable person. We know their potential supply value is exceed the limits. For that purpose, we have to facilitate that type of businesses. Otherwise, their prices are gone up. In order to facilitate this type of large projects, the department arrange special, the value added tax introduce special relief for this type of large projects. Then that stage, the department, any amount paid on their purchase of goods and services, we refunded that amount to the particular registered person. All the project we registered as a tax, deeming that they are doing taxable supplies, till they are not make any taxable supply. If it is a large, say there is a export oriented manufacturing project, though they have not exported any items, we refund the amount. For that purpose, there has been a special power to register that person and make the refund. That means, say that if the first year, though he has not made, say that take the manufacturing, manufacturing operation projects for the manufacturing ready-made garment for export, it will say, assume that the first export to make the first export, it will take 2 years. But the first year to construct a building, for a building contractor, say he has the value of contract is 100 million for the building, that means if he had paid 15 million of VAT for the contractor, the project under this section, the person who has commenced making the projects, he is entitled to get that amount as refund. If he has paid 15 million for a VAT for the contractor, the registered person who has registered under the special project implementation period is entitled to get the refund. This is a very important part of the value added tax mechanism. Now these are the Inland Revenue Act, we recognize any person who has having the income more than 500,000. In case of the employees earlier 600,000, now it has been increased to 1.2 million. Instead of this 500,000, and also we have categorized the source of income. Like but here we have comply in the value added tax system. We have categorized the person who has made the taxable supplies, including the zero rated supplies. Right. Here, so again, you don't worry about the registration levels. Here, I have mentioned here every person who has carried taxable activities should register for the VAT under the following circumstances by the tendering and application to Commission General. Value of the taxable supply in the taxable period quarter has exceeds 3 million. 3 million, 2015 to 3 million. Right. Now the threshold is 3 million for the quarter. Per annual, per annum, that means the 12 million up to right. Now very recent budget, it is reduced to 15 million to 12 million. The per quarter means that means the 3 million. Any person who has exceed, then comes every person who has carried a taxable activity, not all the activity. We have defined the taxable activity. If their turnover is exceed 3 million rupees per quarter, 3 million per quarter, or the 12 million per annum. Up to 1st April 2015, the value was 3,750,000 per quarter and the 15 million for the year. Say there is a person called, he assumed that he start a business, say that he start restaurant business, that business falls to the definition of taxable activity, the business or the trade. Say he estimate this annual turnover will be 50 million. Say this is his first quarter he estimate his turnover will be 2 million, the below the quarter. But if we take the annual, we estimate 50 million. In such cases, if you made an application to the Commission General saying that though this quarter is 2 million, my potential turnover for the annum is exceed 15 million, and also you can mention I estimate the 50 million of value of taxable supply. In such cases, Commission General assign the registration number for the person who applied for the registration, though his value of supply is not to exceed 3 million per quarter, his potential value is exceed 3 million or more than that. In such cases, Commission consider such application and also assign the registration number for the person who requests for the registration. Once the person registered for the VAT, then he should charge VAT on all the taxable supply made by him, irrespective of the fact that his turnover fall below the registration threshold until he is officially deregistration. Right? If someone say, if when he doing the registration, his first 3-4 quarters exceed his turnover is 3 million, the value is the value. But next quarter, his value is 2 million. But he can't say my quarter value of supply is less than 3 million this quarter. He can't avoid the payment tax. If since he is a registered person, he should pay the tax for that 2 million. But he can pay it. Why? Once the person has registered for the value added tax and get the registration number, when he issued the bills for his customers, when he supply good or service, he must issue the invoice for the customers. That normally we call the bill. On that bill, he must charge this supply goods value or the supply value. In addition to that, he must charge the value added tax. Say if someone is go to the hotel and take a dinner, when we go to the hotel people prepare the bill for his bill for his charge. In addition to he put say stating VAT is 50% value VAT is added. Likewise, any good and service is supplied any registered person, he can charge VAT from the person who buy the good or the services. Or then that's why I tell only he collect and that amount have to pay the government. That's why I tell the legal incidence and is passed to the person who registered for the VAT. Now, if he has not collected or collected and not paid the taxes, say and is say the restaurant business falls to the definition of the taxable activity, is the business of the trade, his annual turnover exceeds 50 million, then his responsibility is his turnover exceeds 3 million per quarter and the 12 million per annum, he must get the registration and collect the VAT. But he has not get the registration and paid the VAT. But we deem that his value is included value added tax collection. Say in the end of the year, he has not registered as person, his total collection 115 million, but he has not registered. We assume that the VAT fraction is there, 15% of VAT fraction is there, I mean the 15% is fraction rate is now he has in 115 million, we deem that 15 million is the value added tax, right? That means his total amount is we divided by 115 and multiply by the 15, and on that basis we can collect the compute the value added tax liability. Is there in wrong things? No speakers? No camera? What? Sound is? I couldn't follow you. Sound is? Again, noise again, no? Where is ACU? Yeah. Echo is going. Recording. Record is not going. Going. Right. Once the person is registered for VAT, then he should charge VAT on all the taxable supply made by him, irrespective of the VAT fact that his turnover fall below the registration threshold. The word threshold is again very important. The limitation value we normally label as we call as the threshold. In income taxation, the registration threshold is 500,000 for the year. In the value added taxation, registration threshold is, these are some technical terms in the taxation. Threshold is now 3 million, right? you don't worry about the 3 million or the 50 million, the 3.5 million, the right time to time. The Minister of Finance consider the market condition, also the collect more revenue, and also the exempt on the some people. He can decide the threshold, right? And therefore, if the next budget the minister propose that, he can propose to increase the threshold or the reduce in the threshold. He need to get more tax people for the registration. He can reduce the threshold for the 10 million per annum. Then 250. Then say that if we reduce the 10 million per annum, then 2.5 million per the quarter. On that basis, he can increase for a 20 million per the threshold can be increased. Then registration per quarter come the 5 million. That was happened in the very recent budget for the wholesale and retail. We will discuss this later. Here only we are not talking the value tax on the wholesale and retail trade. Right. Non-taxable supplies. We have learned the taxable supply of goods or service which is liable for VAT. Not all the supplies are liable to VAT. There are non-taxable supplies identified in the VAT tax as below. Excluded supplies and the exempt supplies. Right. Say the government theoretically we learn that in value added taxation, that amount of tax is added to the price level. Then say in Sri Lanka, lot of essential food items are imported. Say the rice, dal, fish, canned fish, lot of textile, cloth, plant and machine. There are so many things are imported. The flour. Then as he said, the value added tax imports on the point of import also, right? Then if the essential food items also, once the goods such items are imported, the value added tax is import at the point of custom, then that tax amount is added to the price, then price level is gone up. Say if any food item, all items are subject to VAT, and once the items are imported, the custom charge VAT, the importer added that VAT amount to their price. Then once the final consumer buy the goods, they have to pay the VAT also. That means price level are gone up. To reduce the price, gone up the price level of the food item, the government not impose value added tax on the such item. The minister has categorized some items, goods and services, as exempt supplies or the exempt services. If the minister has categorized that under Value Added Tax Act, then such items are not subject to value added tax. Once the rice is imported, rice importers are not paid value added tax. Why? The rice is exempted from the value added tax. The gas, once the gas is imported, gas also the one item exempt from the value added tax. Up to a very recent time, the education services also have been exempt from the value added tax. Very recent the controversial things arose. One, the very recently value added tax was imposed to the healthcare services. There are a lot of agitation against such movements, but later the government was reduced. Some services have been exempt from the some healthcare services have been exempt from the value added tax. Still the room services are liable to in the healthcare services, room charges are liable to value added tax, and they are the exempt supply. And therefore, for that purpose, any person who need to get the more idea, what are the exempt item and the value tax has to be verified and get to know. Otherwise, he doesn't know about the value added tax implementation. What then other thing is the excluded supplies, right? The value, this is also a very important thing to be noted. Initially in Sri Lanka, value added tax was imposed only the goods and services manufactured in Sri Lanka, and the goods were imported into Sri Lanka. Wholesale and retail trades were exempted from the value added taxation. Before 4 years ago only, the value added tax was imposed on the wholesale and retail trades. That also imposed only the person who has their turnover exceed 2 billion per annum. Then later it was reduced to the 1 billion per annum, and later reduced to 400 million per quarter. Now it has been reduced to 50 million per quarter. After that, there were lot of agitation in the roads saying that not to impose the value added tax on the goods and services. Can you all remember that the Minister of Prime Minister of this our country, that he proposed to impose the value added tax for the all the sectors, including the wholesale and retail trade. That is the better implementation of value added tax mechanism. We must impose all the tax sectors irrespective of wholesale and whether it is a wholesale or the retail. But in country like Sri Lanka, the wholesale and retail traders, it is not in the position to keep the records and all, to collect the inputs and schedules and all. They agitate, the price levels are gone up. Normally, for that reason, the government reduced it to the 50 million per annum. We will discuss it later. That is before the interest of the value added tax on the retail, wholesale and retail trade. That type of sale were excluded from the value added tax till we impose value added tax on import, retail and wholesale trade. Now all the supplies of goods or services are subject to value added tax, only other than exempt supplies. Now, let's say again, if some goods are not goods or services not come to the scope of value added tax, we have to exclude it. Say very good example. Say in Sri Lankan, some tea exporters, they manufacture tea and export tea. But if they are manufacturing or if they are not in a position to, their production is not enough to meet the demand, normally they procure the tea from the India or other tea manufacturing country and they export it. But good does not come to the Sri Lankan territory, only they invoice. They select some person from the India and ask him to export good to his nominee. But all the transactions are taken place, the documentations are taken place in Sri Lanka, but no any taxable supplies is taken in Sri Lankan territory. That type of supplies also come to the excluded supply. Very little is happening in Sri Lanka. Some tea manufacturers, they procure goods tea from India and send into their clients, and also some rubber manufacturers also procure some rubber from other rubber manufacturing countries and exporting. But only invoice is only the things happen in Sri Lanka is they invoicing in Sri Lanka and they take the sale proceed to the country. Right, exempt supplies. There are exempt supply by in the VAT Act. No tax shall be charged on the exempt supply of goods or services which are set out in the schedule to the Act. For the purpose, students, the main exemptions are given in the chapter annex. Right, we have this one. We have given the annex in separately. I have given. Say, as I said, now these days, say if some healthcare services, they are provided some, say, the dialysis services. Now it has been exempt. Any patient goes to get the dialysis service, the hospital only charge for their service fee, not added to the bill, dialysis fee. Say, same time, any person go to the private hospital to get the outdoor treatment, they do not charge the VAT. If they go for indoor proper high-risk hospital, now healthcare, some of the healthcare services are liable to it. Some have been, supply services have been exempted. If someone has gone to the indoor treatment, then first hospital has to allocate rooms. Then also he had to provide some medicine, also doctor services. And also if you say there is a diabetic patient or is a kidney patient, the dialysis service, dialysis. Then when the dialysis service is provided to the person, the hospital does not charge the VAT for that part. But the room charges, they charge the VAT. On that basis, any supplies have been exempted, no VAT is charged. Then same, even one transaction, one part is subject to the VAT, one part is not subject to VAT. Especially in healthcare service, if someone is go to the indoor treatment, the hospital charge for the VAT for the rooms and the and also the specialist charges, but some reports have been taken or some other exempt service has taken, no tax is that is charged. Right? Say export for this. However, if the exempt goods are exported, it is zero rate supply, hence part of the taxable supply. Say take some goods have been exempted. Say that in Sri Lanka in some period, some some handlooms manufacturers were exempt from the VAT, right, to facilitate the local industry. But some such handlooms were exported. His value is not, if he sell in the local market, no VAT is charged. Say the same handloom manufacturer, his value of local sale is 50 million. Say his export is 100 million, the 100 million is taxed as zero rated. Why? It is become the taxable supply. All the export are treated as a taxable supply. Then his tax payable is become zero. But when the tax, say the same handlooms were exported, say if she had to buy some packing material, some labels, she had to get some logistics services, then each and every, if we buy any service or goods, they have to pay VAT on their bills. Then though he manufacture exempt goods and exported, then he is entitled to get the refunds of that amount what he have paid at the purchase good and service for their manufacturing process. Right, this is a very, very important part of the value add taxes. Even all the countries in the world has, any country, all the countries, those recognize the value add mechanism has identified this type of section in order to facilitate the exporters. Otherwise, the manufacturer has to adapt to the price of the, if he doesn't get the VAT paid on purchase of goods and services as refund, the VAT part has to be added to the price. The good and purchase in the person who is outside country, that means he has to pay the VAT. That means Sri Lankan government collect VAT from the outsiders. They don't have to pay the taxes. That's why the EAC, we always hear the general GSP general. We asking for what is the GSP plus general specified preference goods. Those countries have exempted imports. Even importing stage, they are not charging VAT on our exports. That's why government always looking for the GSP plus. Under GSP general specified preference, no? General GSP, general special preferences, no? Or like that, you know, don't know about that words. Under the GSP, the European countries, they in Sri Lanka, when the good is imported, the import is a custom charge, the taxes, no? But under GSP is in the mechanism, the importing countries, in our case, there is export, they are in their decisions, they have become the importer, but they do not charge the tax of our goods, import from our countries, right? To reduce the price level, right? General agreement for preferences, no? A general system for the preference, right. That under general system for preference, the European countries do not impose taxes on their import. If any import comes from a country like Sri Lanka or the other developing countries, they do not charge the taxes. Then their price level is gone down, and the big demands come to the Sri Lankan get the benefit of that opportunity. Generalized system for the preference, right? Good. We take little break and yes, right. Okay, thanks. Right. Now can you hear? No? Right. Question from the PSN is if a person export goods through other country and that person is to import that goods, then can it be considered as an exporter? No, that cannot be. You know, in Sri Lanka, value-added tax is imposed when the good is imported in country and any taxable carried out in Sri Lanka. Right? Then in that case, as a simple example say in Sri Lanka, the one exporter, tea exporter say that take the Libya, but there are in Sri Lankan manufacturer, he can't meet the total requirement, then he contact one Indian tea manufacturer and ask him to ship some tea to the Libya as requirement given by the Libyan. The requirements come to the Sri Lanka. The Sri Lankan manufacturer pass it to the India to only for you send the goods. You don't worry about the prices and anything. Only his concern is to export goods to the through Indian custom. He has to export to the Libya, but he has to say his sales proceeds. The Sri Lanka pay for the his export. He should invest to the Sri Lanka, not to the Libya. The transaction between the Sri Lanka and the India, but India they have to deliver the good on Sri Lankan request to the Libya. And that case, that type of goods we call the extruded. That is not taken place. That transaction is not taken place in the Sri Lanka or not originated from the only for documentation within Sri Lanka. Any good or supplies exchange in Sri Lanka. Right? Can extruded supplier consider as the exporter? No. Here also I can't say the only for exempt supplies, any good or supplies have been exported, then we treated as a taxable supplier and the tax at the zero rated. Extruded goods means any businesses, not the goods. So earlier, hotel and retail trade were exempted, and also any transaction, as I earlier explained, no good or exchange between Sri Lanka, but origin from other country. Two different destination transactions are taken place, only invoices are taken in Sri Lanka, right? Those are the, when we decide the exporter, any exchange supplied is exported, the exemptions have been given for a good or the services, right? Say that the rice is exempt item, but it is exported, then that is tax is, that is the amount, the particular product is service, since it is exported, that value is taxed at zero rated, then he is entitled to get the input tax and get the on that basis we have exempt supplies are exempt goods are exported, we treat it as a taxable supply. Only very limited time. Say always, normally we know the accountants, we know the word of turnover. Finally, once the financial statement is prepared, we normally revenue is recognized label as the turnover. So in some time, in the local, if the business exists more the export and local revenue and the export revenue. In other term used as the turnover. Let it stop. No, good. Then here in turnover value in turnover tax system, any amount receivable or receivable that transfers were called as the turnover. The word turnover was defined. Here the value of supply. Right. Then turnover taxation, the word turnovers, if any amount received or receivable that transaction. Right. On that way the word turnover was defined. If it is a manufacturing business, any item, manufactured items sell in the market and any amount received, that is the turnover. Likewise, in the value add taxation, we call that is the value of supplies. Right, the word same, that word of turnover, the revenue, that is the value of supply. Right, now as he said, in Sri Lanka now value add tax rate is 15%. Right, here say the one transaction of the contractor, he put a commercial building for some business, he take his value is 100 million. Say they construct the building for the keels, then for a keels holding, they have to get the 100 million. Since the word is construction business, post the definition of trade and business, then he must and also his value of supply is exceed 3 million per annum or the 12 million per quarter. Now he is getting the 100 million. He should register for the VAT. Now this any registered person who registered for that, he can charge the VAT. On that basis, now the particular the name of contract is company A. Company A is a construction company. He has registered for the VAT. The particular quarter is value of supply is 100 million upon the case. Now when he invoiced to the case, he put the 100 million as the value of supply and put the 15% of value add tax to be added. By a value add tax mechanism, he can charge the VAT. He must separately show the value add tax amount. So if the value is 100 million, now he put the rate of 15% means 15 million, and he must charge 115 million from this customer, and also that means the contractee. Then when he declare in the department that amount, say his value of supply is 100 million, taxes come 15 million. The one the rate is now he has collected 115 million including VAT. When he submit the tax return for the tax department and the quarter ended, the taxable period ended, then he has to put the value of supply is 100 million, rate is 15, then taxes come 15 million. Now his output tax is come 15 million. The same one we say 100 million. Now he has let the input tax. Input tax means when he purchase, say he purchase, he had to construct a building, he has to pay subcontractors. Then he has to, in first stage he has to purchase the metal, labor, cement, steel, fan, timber. You know that there are so for a roof, when he construct the roof, in the roof, here again timber, again you know the roofing, sheets or the tile, some aluminium fabrications, like that so many items he has to pay. When they purchase the good, again like construction contract charge for the case 50%, other supplier also charge, when they supply goods to the contractor, they charge their VAT. On that we say he has purchased 15 million worth of material and paid, then 15%, that means they have paid 750 million. They say the 100 million is value, then say value of supply I will put on that way, 15% equal to 15 million. This output tax liability. When they say the inputs, then that inputs always say the purchase. Less input tax on purchases. Say he purchases, say purchase value is 50 million, say, then how much he has paid as inputs? 15%, 7 million 500,000. Say he has only for a purchase we put the 15 also. Then he has paid 75 million of input. That is we call when they purchase goods, when they are in their purchase bill included what amount of VAT paid. If say the bills of he must have some purchase bills of cement, purchase bill of steel, purchase bill of fan, timber, tiles, roofing sheets, and also if he has purchased, you have employed the contract labor, if he is a registered person, for that or the subcontractors he has paid, all the invoice he has paid, then he added amount of all amount he has to add it for the amounts, and then he have to prepare the for a record keeping, he has to maintain some records. He must input tax registry, he has to maintain. When they purchase goods, he must put the name of the taxpayer, registered person from whom he purchased the good, that means the supplier name. And also he sees the registered only that can be charged only for a registered person, then he must also have the value added tax number. That is also one requirement for invoice is issued. We can in the Value Added Tax Act very clearly defined, once the invoice is issued, certain elements must be reflected in the VAT invoices. In VAT invoices, the name of the business must be there, its registration number must be printed, all the invoice must be printed, there must be serial number. That first is his name and address of the business. Then the person who to whom the goods, then means the purchaser's name and his number also which must be put, and also his registration number, amount of unit price and the quantity involved and the total value, and plus in addition to he must put the tax amount separately. The value added taxation tax amount should be shown separately. If then on like that way, in purchase they are involved thousands of bills. If we take the large business, thousands of bills are involved. For one example, if we take the Sri Lankan airline, there are thousands of bills are involved for the 1 quarter. Each and every bill they have paid VAT and they claim it as their inputs. There may be some for in case of in construction contractor for supply there may be 1 or 2. Only they receive advance or some receipt for a month or 1 or 2 payments received, but they have to purchase more and more. Then lot of bills are involved. On that base, their sales bill, sales invoices, they have to compute the value of taxable supply and the value of tax amount of collected. For inputs, purchases bill, they have to compute the input tax. Then they have to pay balance payable. In that example, he has to pay balance tax payable is rupees 7.5 million. This is the simple calculation of the value added tax. If he has not allowed to this 7.5 million as input tax, now when he purchased, he collected 15 million, that means we are not allowed this type of tax credit, then 705, then he has to pay the 15 million. When this 7,500,000 is take as a tax credit, that amount is not going to his credit cost. When the cost is evaluated, they know he can get the tax credit for the inputs. On that basis, he can reduce this bill. If he has not includes any purchases, he has to not pay any VAT on purchases, then he has to pay the 15 million to the government, no any tax credit. To reduce his liability, always he has to collect the value added tax bill when he purchase goods, then he has to transaction with the value added tax registered person. Only they are entitled to issue the VAT invoice. And they are in value added tax system to get the more benefit to the value added tax payers. They have transaction with the value added tax registered person. Then mechanism smoothly was get the full benefit of the mechanism, the value added. Then only he is paying tax for the value added tax. Then again the value in when we prepare the adjusted tax profit for the taxation, we adjusted certain expenditure and for the profit. We took the profit ascertained with the accepted principle of commercial accountancy and we added some. Depreciation we added. Entertainment we added. Donation added. On that basis we adjusted the profit. Likewise, in computation VAT, in normal course of business, the same business, they are manufacturing business, they are doing wholesale and retail, and same time they are supplying some exempt supplies even. Especially in the healthcare sector, now they are providing exempt supplies and also the taxable supplies on that basis. And also once the goodies purchases, some bills they are paying VAT, some are not paying VAT. In this case, especially as I explained the income taxation, when the profit is adjusted for tax purpose, certain expenditures were not allowed, especially business advertising, entertainment, these were not allowed. Likewise, in value added taxation also, some inputs are not allowed. Say if someone has purchased a car, so if the car is used for the traveling purpose, then that input is not allowed, irrespective of whether it is a capital assets or the purchase is the capital assets or the revenue assets, revenue expenditure. Any amount VAT paid is allowed as an input as credit, but certain payments are not allowed VAT paid. VAT paid on motor vehicles, especially in cars used for a motor traveling, is not allowed. Here now we are going to discuss computation VAT. VAT output is computed by applying the VAT rate on the value of supply is the total amount of consideration received for the transaction. As my example, if the contractor, he receives the contract value, or the even especially in the value added taxation, any advance received also treated as a taxable supplies. Advance received also they have to pay the taxes, even especially in construction. Contractors receive the mobilization advances. Once the mobilization advance is received, they have to compute the value added taxes, and any right on that basis. The total gross amount received is but say in 115 million is collected, but say 150 million is not the value of supply, only for the 100 million. Say in some cases the Inland Revenue Act does not permit to some people not to issue the VAT, though the VAT registered persons have been registered at VAT, they are not entitled to issue the VAT invoices. Why? Any person who purchased the good or service has not been registered. In that cases, no VAT invoice to be issued. Say if the normal person constructs a house and went to the one steel manufacturer and buy some steel, but according to the law, the manufacturer should collect the VAT for their value of supply. But since the person who buy the steel is a normal consumer, has not registered for it, in such cases he should only price including the VAT. He should not separately show the VAT. He should not separately state the VAT. Say the value is 10 million, the VAT is 1.5 million, then total 11.5 million, but he should not separately state the 1.5. He saw the 11.5 million. He manufacturer he collected the VAT. In such cases he must get the VAT fraction. Then means if he 11.5 million collect, he know the 10 million is the value of supply, 1.5 million is the value added tax on that basis. Right. Other thing is the value of supply good and service is that total considered less VAT charge. That means value added tax charge is not part of the value of supply. However, such value should not be less than the open market value. We should not talk about that type of things. Normally, in the normal condition, business, once the transactions are taken place between other than associate person, market value is applied. If the transaction is taken place between associate person, normally market values are not applied, right? In that the transaction between the associate person, then they can put their own value. But in such cases, the Act says the market value should be applied for that purpose. The section 30 of the Value Added Tax Act very special. Right. Under section 30 of the value added tax, power of the assessment of the determine the market value. Where the assessors, that means the one tax office is the opinion that registered person has made a taxable supply for a value less than the open market value. Such of such supply O for no value. They can put the less value or they should not put the value, or the transaction in respect to which taxable supply has been made is between two associate persons. In order to avoid the payment of tax, the assistant commission shall determine the open market value of such supply on which tax shall be charged. having regard to the circumstance of the transaction and the time of supply. Say, if any transaction between associate person in order to avoid the taxes, they put lesser value, the tax officers have the right to determine the open market value. Right? For that purpose, there are a lot of criteria can be chosen for the officers. A recipient is entitled to claim deduction of any bad debts incurred in the taxable period in arriving at the output tax. Say, if any bad, say the normally in value added taxation, whether amount is collected or not, once the invoice is issued on accrual basis, record must be kept and maintained, and accordingly value added tax to be paid. But say once one supply become bad during the period, though the invoice have been issued, but amount is not collected, then if the debtor become the bad, that amount to be deducted from the current period, and he can reduce their liability and he can collect this correct liability. Though he have invoice and paid in prior period for in accrual basis, but in later they can adjust. Likewise, and again, when they collect that bad debts, then again they have to put the taxes for compute the bad debt collection. Right? That is like income taxation. Any bad debts, any debtor become bad and not collectible, we charge the P&L, we allowed it as expenditure. Once the bad debt is collected, and again we take it as accounts and income. No any adjustment done for that type of bad debts. Likewise, the same treatment comes for the value added taxation also. Presently, there are only two rates. They rate 1% and now standard rate is, now we have to change as a 15%. Do you don't worry about the rates? The current law, we have to get the rates. Now up to the very recent, we at the 12%. Then again, Minister of Finance, new government reduced it to the 11%. Again, Minister of Finance, Prime Minister increased it to the 15%. Some litigation also involved. Why? Again, you all must know about this type of things. Says Minister of Finance announced the rate of, they reduced the 12% to 11% in his budget speech as the Minister of Finance. Then we reduced it to we collect the 11%. But that budget was passed by the Parliament. Later, Prime Minister increased it to the 15%. Like he also changed some changes to value added tax. But two politicians challenge the constitutionality of the increase to 15 by the Prime Minister. Why? Means that has been not passed by the Parliament. Only 11%, reduction 11% was passed by the Parliament. Himalayan says the Commission of Inland and Minister of Finance and lot of responded against that case. The court ruled out that Prime Minister can't change the, once the Parliament is approved the rate reduction of 11, Prime Minister cannot increase it to the 15% without consent of the Parliament or the approval of the Cabinet. Then again law was changes. Likewise, rates are time changes. On that basis, we have to change the, right now in Sri Lanka, standard rate is 15%, right? Before that, there was 11% and also the 12% we will give you the dates and all. Zero rate is applicable to direct export of goods. Further, certain service provided to person outside Sri Lanka also, say some zero rate is applicable to direct export of goods. Further, certain service also come to the zero rated, right? Say any service connected with the international transportation, then those are come to the zero rated. Say in Sri Lanka, a lot of software developers, they are exporting their services. Lot of accountants, lawyers, professionals, they are providing some service persons outside Sri Lanka, they are earning foreign currency. That type, they are providing some services. In section 7 of the general knowledge, if someone need to see what are the services subject to zero rated has been explained in detail, explained section 7. Say section 7, zero rated supplies have been described in the section 7. Section 7 says goods shall be zero rated where the supply of good has been exported such goods, and service shall be zero rated where the supply of such services are directly connected with any movable or immovable property outside Sri Lanka. The repair of any foreign ships, aircraft, or any merchant ship registered in Sri Lanka, or the refurbishment of marine cargo. Likewise, it has been recognized zero rated supplies. Right. That means I had to highlight here that the rationally means that any service related to earning of foreign currency, that real net foreign currency, that type of services also zero rated. Especially I am telling the software developer, they are providing service, some lawyers are providing service, some architects are providing service for the outside country. They are receiving some, but say in some cases, some importers are getting some import commission. That type of commissions are not zero rated, right? In that case, there is no any earning elements. The importer sends some money to outside country, in that part come as a commission. In that here, there are no any earning elements, right? On that basis, any good or service are zero rated. That means then any export value is 100 million. Then we have put say in that one output tax is say the zero rate 100 million, but he is not collected VAT upon the exporter. Then we tax at the zero rated, right? Then value taxable supply is zero. See, value of export, say 100 million. Then we apply zero rated, right? Now how much now is output tax now? Zero, nil, right? Now his liability is nil, but still the exporter, once the exporter invoice to the other country, he can't collect the VAT, right? We export a zero rate tax rate of zero, right? Now is value export. Now is that is this output tax. Output tax, value export zero rated. Now is input comes. Input tax now on purchases. Say again, the 50 million worth of would have been purchased, and when they purchase the goods, he has paid 15% of VAT equal to 7.5 million. Now his liability is nil. On purchase he has paid 7.5 million. Now is there tax payable? No any tax payable. Now that input tax is more than the output, then he is entitled to get the refund. His refund amount is now come to the 7.5 million. Say, if he had some local sales of 100 million and then his liabilities again come to the 15 million. In such cases, now he has to only have to pay. Then his purchase value is increased, and on that basis, we have to compute the value added tax liability. Only here you have learned that export are taxed at 0 rated. In value added taxation, again, very special treatment is if any fixed assets is disposed, that amount also come to the value. Say the manufacturing of organization, when he purchase lorry, we have to pay the VAT. Then he claim as an input tax on as a purchase. Say after using it for 5 years period, if we dispose it for some amount, then in dispose stage he has to collect the VAT. Say he has not collected the VAT, then we deem that VAT has been collected, VAT fraction to be identified, and we have to compute the value. In some, normally in exams we give that type of adjustment. There is normal value of export value is this, good disposal local market is this. These are the exempt supplies, disposal of car, disposal of motor lorry, machines, like that we give. Then on that basis you have to find the correct liability. The student has to compute the correct liability. Then and say when he purchased the goods, he has paid VAT of 500,000 for purchase car, then that should be allowed. And likewise, say, and also if he has, say, right, this one adjustments. They in export, exports of goods or the providing service for outsiders, that value of supply is taxed at 0 rated, right? Then, but they are entitled to get the input tax credit that end up with the refunds. In all other taxable supplies, they are liable to tax at the current rate of 15%. On that basis, we have to compute the correct liability. Any input tax paid on purchases, they have to claim, but any item imports, any VAT paid on some item which is not entitled to claim inputs should be excluded, like cars. Any VAT paid on cars is excluded. In other things is, if any, while doing taxable activity, he is providing some exempt supplies. When the exempt supplies is providing, he has to buy some goods, some inputs are involved. Say take a healthcare businesses, they are providing some health, some room service are liable, some medicines are exempted, but they have taxable supply plus exempt supplies, but some inputs are involved for the both supplies. Say they take some of one business organization, there 100 million they are taxable supplies, 100 million for their exempt, both equal basis taxable. And say some telephone, on telephone they are paid value added tax. Now value added tax paid for both business, then we allowed only input tax only for the 15%, only for in amount connected to the taxable supply, right? Here very important to note that any input is allowed if the input is related to taxable activity. Any input is related to exempt supplies is not allowed to deduct against input tax, against the output tax liability. This is one very important thing, is that any input related to exempt supplies is not allowed against the output tax liability as input tax, right? That is also one thing to be noted. Right. Input tax is the VAT payable per tax credit is on that basis comes, as I said again, explain. Input tax is the VAT payable by the registered person. VAT payable, not the VAT paid. Right. VAT paid by a registered person. Paid on purchase, we put purchased by a registered person to another registered person to another registered person in respect of goods and services obtained from such person to be used in the taxable activity. Here I use the word of if the any input used in the taxable activity. Say if the purchases are not involved in the is involved in the exempt supply, not allowed. A registered person is entitled to at the end of the period is such period to credit for such much of his input as is allowable and then to deduct such amount from any output that is due from him. However, if a registered person incur input as in respect of non-taxable supply, exempt such inputs cannot be claimed. If the relevant goods are used or are to be used partly for the purpose taxable supply and partly for the purpose of the non-taxable, the input tax shall be claimed proportionately. If we can identify some input are directly connected to the exchange supplies, we not allowed, but cannot be. See the like telephone, we cannot cannot be correctly identified. Say if the healthcare services, say for a dialysis service, if they have used some motor vehicle only for that purpose, they are doing mobile service and all, then we are not allowed the input. Say in the particular place, to use in a particular place, they have purchased some refrigerators or some items and paid, but that amounts are not, VAT is not allowed. Why? That VAT is not directly connected with the taxable activity. If we can, if the registered person correctly ascertain the involvement of the inputs, whether it is involved in the exempt of the taxable supply, on that basis he has claimed the input. If it cannot be correctly identified, the proportion that might be claimed. We take some example. The VAT details of company for the taxable period ended 31st as follows. Taxable supply 50 million, exempt supply 25 million. Input tax breakup is as follows. Direct attribute taxable supply 2 million. Right, direct attribute to both supply 1.5 million. Determine the allowable input tax application. So direct attribute input tax is 2 million. We can, then here 1.5 million is involved, but proportionately we have distribute the input for the exchange supply and the taxable supply. Here taxable supply is 50 million, 25 million is the exchange supply. That means the 2/3 is gone to the taxable supply. We can simply calculate the for a 1. Say for a 1.5 million, 2/3 is the 1 million. On that basis we can easily compute. Then he is entitled for the 3 million of input. So input tax in response. These are very special recognized in the Value Added Tax Act. Right? Section 22. I put here the section also. If section 22. If someone much interested, section to clearly identify the input tax credit. calculation of input tax is section 21 and section 22 the input tax credit is here. Input tax in case of motor vehicle are not allowed except for the following. If someone motorcycle purchase, they can claim. That is happening. Lot of business people have purchased a lot of motor vehicle and given to their employees. Bicycle, motor coaches provided to the lot of companies purchase motor coach for transport their employees and also for their distribution chain. Motor vehicle exclusion tours are, you see, in some tour agent business, you purchase the car, then they are say the motor vehicle used for the exclusion tours for the transportation tourists and transportation goods, right? Say in that case, that type of, say the tourist business, they purchase cars and use for the transport of tourists, then they are entitled to claim the inputs, right? Hiring cars, motor vehicle forming part of the stock in trades. So here you can easily understand if motor vehicle manufacturer, motor vehicle dealer, they import motor vehicle and selling, they normally the car sales and all, their inputs is the motor vehicle purchases and their output is the selling of motor vehicle. If you are going to apply this one, the picture is totally distorted. But if any person engage the motor vehicle business, car business and all, then his input is that the car become the stock quantity, not become the fixed assets of the business, right? That difference must be distinguished, right? Right. Treatment of excess input. Any excess input tax incurred can be carried forward to subsequent tax period or period set off against the output tax. Now, in Sri Lanka, though the value-added tax mechanism was introduced, it was not correctly implemented smoothly. Why? A lot of distortions were there. Especially for import business, the custom is charged value-added tax not on the CIF value. When they say the CIF value is 100 million, say the one person is import some more, say take the motor cars for sell in the market, motor vehicle dealer. When they import the goods at the point of custom, value-added tax is charged. Then normally value of supply is applied for the collecting of VAT. Normally in all the taxes, CIF with their value, but VAT is charged on the custom value apply certain formula to collect the value added tax. For that purpose, custom first take the CIF value, then add it to the custom duty paid, custom duty and other taxes paid, and also take the full value and uplift it by another 10% and apply the rate of 15. On that basis, custom is charged the value added tax. Then, especially in car businesses, custom is take the agent valuation. On that basis, sometimes the custom value more than the market value of the goods. Then, when the goods are disposed in the open market as taxable supply, output tax is less than the input tax. That was happened. Then, especially in the car business and the import and selling business, input tax is more than the output taxes. Why? The custom is applies different formula for the collecting the value added tax. On that basis, all the importers were entitled for the refund. Why? Yeah, input tax paid on imports were higher than the output tax liability. On that, but they were not entitled to get the refunds, right? Only manufacturers and then service providers and the exporters are entitled to get the refunds on the value added tax act. Importers are not entitled to get the refunds. If any excess of the importers, they can carry forward for the next quarter and claim again the future liabilities, subsequent periods liabilities. But government has changed that one to allow some up to some extent the credit against the, because in some cases thousands millions of refunds were arised for some importers, but they had to, their cash flow problems arises, and to mitigate that matter government allowed to their tax liabilities again their other tax liabilities and also the other income tax or the value added tax liability. There is special treatment introduced by the government to excess inputs as set off again the other tax liabilities. Now it has been stopped, right? Only for your knowledge, that type of things so prevailed in the country. Right, refunds. See, in any value added tax mechanism implementing all the countries, all the tax is collected only the domestic consumption, right? That is the basic rule. That is we call the destination rule. In first lecture, first day I explained, in Sri Lanka also the following the destination rule. That's why when the good is imported, we tax at point of imports. But when the goods are exported, no, in the point of export, custom does not charge the value added tax. That is for the taxable supply. But tax at the zero rated. No any taxes, well, this zero is applied, no any taxes come. But value added tax act has not permitted the Director Custom to collect the taxes on the export. Only as custom has been empowered to collect the taxes on the import. The any tax liability come the export, that has been implemented by the Commissioner General. Commissioner General determine Commission under the Value Added Tax Act. Export are rated at zero rated. The input tax in respect of the following registered person, the excess input tax is refundable. Zero rated supplier being direct export of goods and provision of certain service to person outside the Sri Lanka. That is very any export are taxed at zero rated. Then if any inputs are in, input tax is involved, they are entitled to get the refunds. Indirect export of goods, supply of good to exporters. Indirect exporters of goods supplied to exporters. Then if they are value exported more than 50%, they are entitled to get the refund. Persons who have not commenced making taxable supply but are within the project implementation period. As I explained, the lot of large construction projects and also large manufacturing projects and hotel projects goes, it goes many years. It will take to complete the project take 3-4 years. But when they purchase goods and services, they have to pay the VAT on their purchases bill. Then that type of suppliers, project implementation person are entered to get the registered, with the registered and the value tax, though their present supply value is not exceed 12 million per annum or the 3 million, but their potential supply value is more than that million. For that purpose, department normally in tax administration see their project reports, whether it is approved by the BOI or that is approved by the cabinet, approved by the parliament under the Strategic Development Act, or if it is not even approved by BOI, but they can prepare their project reports and all. In the project cost we can get other approvals and their ownership of the land, lot of information can be considered, all those facts, and the duration is considered. Commissioner General approve this type of projects. Therefore, that purpose Commissioner General can, normally we call section 22 7. Under section 227, commission can register that type of person and they are entitled to get the refunds. Specified project means also the government has very recently introduced lot of projects, they are not under the BOI project or special projects. Government approved, say the government, especially the lot of road were constructed and also the ports, airports were constructed. The government gave the contracts. The government was the contractee. Then on that project, lot of projects were implemented through the foreign loans and the aids. Then, but when the project in that cases also the complete the project, there are project contractors, but they have to pay the taxes. But on that project also exempt specified by the project was exempted, but specified by the commission as a specified project. Then the project was originally exempted. If the project is exempted, no value-added tax is chargeable. But in such cases, no value-added tax is chargeable. They are entitled for the inputs. Why? Their cost is otherwise gone up. On that purpose, Commission General specified if the project is exempted and if such project is specified by the Commission General for the purpose of refunds, then they were entitled to claim the refund. Then there are zero rated goods or supplies of the service and also the indirect suppliers and also person who have made not commence taxable making activity but under the project implementation period, and also the project specified the minister under the value added tax act, they also entitled for the refund. Normal other exempt suppliers are not entitled for the get the refund, no, but in such cases the project has been specified the project by the minister, then they are entitled to get the input tax. However, with the implementation of simple, right, not, I mean, we are not about the SWAT, it was no more in the 1st of April, right. Right. See, exempt supplies. We have informed to the custom also at the point of import value added tax is imposed. The custom harmonized system code is on that basis. Lot of codes are there only for identify the goods. The milk, these are the exempt. Milk and cream concentrated or containing added sugar or other sweetening. Milk and cream concentrated or containing added sugar or other sweetening matter not containing added sugar, right. Then these are, see the these are the supply values, in Sri Lanka. Here, VAT liable item. Here, I say that if you take the milk, there are full cream, the milk and cream. And also you can see some malted milk, the nest malt, there are a lot of milks. And also some, some infants, we call it in the infant milks. That type of milk have been exempted, right? The milk is, some milk is liable to tax, some milks are not liable, depend on the HS code. See the some wine is here especially. So all the spirits are liable, right? This is here we have. See, these are liable supply in some cases. Then I will show you this On that basis, once all the goods are imported, the customer has to collect the value-added tax. Then he must identify the goods. I called you the good and services. Some goods have been exempted, some goods have been made liable for the tax, and therefore customer has to identify the what is the whether good is liable or the not. For that purpose, we have given the list. What is the exempt list and the what are the liable items. These are the some liable items. See here is all the whiskies and no, they are not essential food, but if we take this one, now here we got the exempt supplies. If we get the schedule of value-added tax price, here see, these are exempt goods and services, the Word document. Following goods and services are exempt from VAT on import or supply. Say that import or supply means in locally ones selling and goods and all. So import or supply wheat flour, the right, pharmaceutical products, drugs and other than cosmetics. See some drugs other than cosmetics, because there is some same material work as a drug and also the cosmetics, right? Ayurvedic preparations, say aircraft, helicopters, pearls, diamonds, diamond powder, gold coins, books other than textbooks and notes. This is the books is exempt. Some other type of books have been made liable on that basis. Crude petroleum, kerosene. See, if the prices, if the value-added tax is made liable for that one, prices are gone up, then consumers, poor people has to pay. On that basis, the government has exempted this type of item as exempt item on that, right? Then you have to follow the exempt list at the liable list. On that basis, you can get some idea of why the some would have been good assets have been exempted, why some good assets have been made liable, right? If the price effect is more, badly affect for the poor people of this country and largely consume it as essential food items, and no taxes is charged. This is not essential luxurious, the luxurious item, then what is charged, right? Now time comes to poor. Now we are today. Now I am going to stop the for today, right? You all are requested to read all this document, upload the system, and the next week I will upload the assignment for the second assignment. I instructed all the students to read all the documents I have uploaded the system, right? Thanks for the listening and participants. Thanks. Bye.